Over $1.5 billion has just been liquidated from the crypto markets. And while everyone else is panicking and losing their minds, I'm here to tell you why this was not only expected, but it's actually bullish. This is the exact liquidity vacuum environment that I've been talking about and preparing you guys for literally months, and we know for a fact that it's almost over. Today, I'm going to be talking about what all of this means. What likely comes next? The only single scenario that has any likelihood, in my opinion, of playing out that could flip the markets insanely bearish, and exactly how that would happen, and overall how I see things playing out from October into November, and how that's likely to affect smaller tokens like AVO, Virus, WINR, UNA, etc. Okay, so this morning I woke up to the single biggest liquidation that we've seen in crypto since 2024. Bitcoin went from 115,000, dropping all the way to 114,000, before absolutely plummeting in a single hour from 114,000 all the way down to 112,176. In terms of scale, this is a massive liquidation. And for those of you guys who don't understand what liquidations are or kind of how this works, when people take out leverage investing into something like Bitcoin, they do this because they get more upside exposure or downside exposure when the price moves. Basically, if they take out 2x leverage on $10,000 invested in Bitcoin, it's as if they have $20,000 invested into Bitcoin. So say they really believe that the price is going to go a lot higher and they want to make more gains when that happens, they might take out leverage so that, they have double the gains using 2x leverage or 10x the gains using 10x leverage. However, the really big caveat is you have this thing called a liquidation level. And if price goes the opposite direction as to what you expected, and it hits that liquidation level, you lose all of your money. So if you put $10,000 in on leverage and you have a liquidation level of, say, $112,000 per Bitcoin, and the price of Bitcoin hits 112,000, you get liquidated and all your money is gone. And because different people are taking out different amounts of leverage at different price points, there's all these different places that people can get liquidated. And oftentimes when a lot of people take out a lot of leverage at a certain price level, you get this really thick pocket of liquidity that price really wants to go down and hit into. And on this chart, this is shown by these really bright areas on the chart, that those are big pockets of liquidity where people get liquidated. And what'll happen is right before these big pockets of liquidity, often market makers will kind of thin out the books. Because of the way that their business model works, they don't want to get caught during a liquidation cascade. And so it makes it really easy for price to kind of gravitate into these big liquidity pockets. And we can see that's exactly what happened. Price dipped into these liquidity bands and it ended up cascading all the way down here. Now, the bad news is there's actually still a decent amount of liquidity underneath where price currently sits. You can see there's a really thick band here at 111, and there's some decent liquidity down at least to 110. But on the flip side, you can also see there's a ridiculous amount of liquidity sitting overhead. Like obviously far more liquidity is sitting overhead than underneath. But honestly, all of this is really just a minute piece of the puzzle. What I think most people are missing is the very thing that we've been talking about for months, and that's that right now we're going through the TGA rebuild. And I've talked about this endlessly since July. Back in July, I said, hey, August and September are going to be bearish. They're going to be a liquidity negative environment. We're going to see a lot of liquidity siphoned out of the global supply. And so that should be a bearish environment for crypto because crypto is very reflexive towards liquidity. And right now we have this huge liquidity headwind that's pushing back against price. Every time price tries to move up, every time the market tries to be bullish, you have this massive headwind and that all this liquidity, like a massive amount of liquidity, is getting siphoned out of the market. And that's just really bearish overall for price. And what we saw happen is because July was such a hot month for crypto and we saw price move up so much, we saw a pretty decent correction in August based on, for one, seasonal weakness, based on, for two, people anticipating this liquidity negative event coming in September, those that were kind of looking ahead of the curve, like institutional investors, etc. And for three, we just had a lot of like headline events that happened one after another that were really negative in terms of people were thinking maybe we couldn't get cuts because of some of these inflation prints came in a little bit hotter than people expected. And some of the comments from the Fed were a little bit less dovish than people wanted. So everyone's freaking out. They're saying, oh my gosh, maybe we're not going to get a cut in September anymore. If you guys remember, this was actually a thing for like a week and a half, 2 weeks, where people thought there was going to be no cut in September. The odds even on Polymarket, it dipped below the highest probable outcome was no cut in September because of some of these headline events and some of these comments from the Fed. So all of these things kind of compounded together to pull forward some of that bearishness from September into August, making August this like super bearish month for crypto, even though technically in terms of liquidity, we had not yet seen that liquidity headwind. Now, rolling into September, what we actually saw was a lot of bullish news, a lot of bullish momentum in terms of like headline events. Like some of these inflation prints came in great. The comments from the Fed were great. They indicated, really high chance we're going to get a cut in September. The poly market odds for a cut in September skyrocketed to like 99%. And then obviously we actually got a cut in September. And then now they're telling us they're going to give us 2 more cuts this year. All of this is extremely bullish news. And so price did try to move up based on all this news. It tried to move up higher. The problem is, or the reason that price is struggling so much, is because we have this giant liquidity headwind that's holding back price from moving to those higher highs. If we weren't sitting in the middle of this TGA rebuild, price would be a lot higher. Like we probably would be breaking out to new all-time highs at this very moment, just based on the fact that we got those cuts and everything else that's come in. But because we're in such a negative environment right now, it's been really holding back price. And anytime there's any sort of weakness in the market, it leans towards the downside. And it's been making it a lot easier to see these downward moves. Now, the good news is this should only last 8 more days. The TGA rebuild should be complete by the end of September, meaning basically in 8 more days, this thing that has been weighing down the market basically since August is going to be done. It's going to be over, and we're going to flip into seasonal bullishness in that October is seasonally a very bullish month for crypto. On top of, we're going to be flipping into a potential October rate cut. People looking forward to a potential rate cut in December. Altcoin ETFs, 3 more rate cuts priced in 2026. And a lot of hype around just rate cuts in 2026 as Trump appoints a new Fed chair and as well as new Fed governors. The Clarity Act passing, which again, a lot of people I feel like are really underplaying how insanely monumental that alone, like if we had literally nothing else going for us, none of these ETFs or anything, that one alone is like enough to kick off a bull run. It's absolutely insane. All the SLR changes that I've been talking about for a long time, as well as just like a million other things that are just insanely bullish for crypto assets and everything else in between. It kind of feels right now like sort of like an iceberg, where the tip of the iceberg maybe is bearish and everyone's seeing that and they're like, oh my gosh. But like the bottom half of the iceberg under the surface is like insanely bullish, and nobody's seeing all of that is about to come through the pipeline. My point is that all this was expected. We expected it to be bearish in August and September. And what I said, and what I've been saying over the past couple of videos, is that I expect September to end in the green and be one of the rare exceptions where we have actually a green September rather than a red September. But I want to clarify what that means exactly by actually showing you the chart of where we're currently sitting today. Currently today, at today's exact prices, September is sitting up 4.15%, meaning we would have to go back down below 107,000 for September to end in the red. And if we're sitting anywhere above 107,000, this will technically be a green September. I personally do think the bottom is already in. I think when we hit 107,000, that was the bottom. I suppose it's always possible for us to go back and test the bottom. But what I've been saying is I don't think we're going any lower than that. Like sometimes, yeah, the market does like to come back down to the bottom, make sure it's really solid and it's good before just rocketing a lot higher. I personally don't think that's the case. I think it would take some sort of really negative headline event. For example, Powell speaks on Tuesday, so he'd have to say something really hawkish. If Friday's PCE inflation data came in really bearish, that could be something that would cause that. So you would need some sort of headline event to actually send us back down to that bottom. And for me, that would just represent a buying opportunity to get into some of these positions at ultra cheap levels before we head into a seasonally stronger October, November, etc., and before we head into higher highs in 2026. And according to my OmniCycle framework, on like a pure macro level, we should see the alt season gate, which is kind of like a measure of when the environment is prosperous for alt season to begin. We should see that open at some point in late November. Now, it's been my belief that October would mark the start of alt season, and that even though on like a pure macro front, we don't see that environment really kick into play until late November, according to my OmniCycle framework, I believe that the market will actually pull forward that bullishness in the same way it kind of pulled forward the bearishness from September into August this year. I believe it'll pull forward the bullishness from November into October, because October is known as like a seasonally strong month for crypto because of these altcoin ETFs, and because we have that second Fed cut in October that kind of marks the start of a rate cutting cycle. But I do want to clarify, because I think some people are maybe misunderstanding exactly what I mean by that. I don't mean that like we're going to see like 1,000% gains in alts in October. I know some people believe that because they're following the 4-year cycle model. So they think essentially the entire 4-year cycle is going to be compressed into like basically, essentially, according to some of these people, a couple weeks of October. And then, we're going to see the top and it's going to be over. That is not my belief. I think we're going well into 2026. And I just think October is going to mark the start of an alt season. Basically, it would be like the year before 2021 and 2020. So it'd be like that November range of 2020 where we started to see alts perform and do well. But obviously, the biggest gains were in 2021, not 2020. And to show you an example of what I mean and how it seems like right now we are kind of following the 2020 playbook, you can see the alts had a run up into like July, August, before having a sell-off into September, and then they kind of chopped sideways all the way through October before starting to gain some traction in late November 2020. But obviously, this wasn't like life-changing traction. This was more like they just started to wake up. And you can see from there, that's when they really started to run into February, March, April, etc. of the next year, where alts really got out of control before going through a pretty major correction and then having a second run up into the end of the year. My point is, I don't expect October to be like this insane, again, 1,000% month or anything. I just think historically it'll be remembered as the beginning of alt season when things started to first kind of tick up. But I did want to highlight one thing that could completely invalidate my bullish October thesis, and that would be if we did not get a cut in October. This is the Atlanta Fed President, Raphael. He's currently not a voting member of the Fed, meaning he's not one of the people that actually gets to decide if we're going to get more rate cuts or not. But he's saying that he expects no further rate cuts this year after the September rate cut. Again, not currently a voting member of the Fed. So this is just his opinion, not a reflection of what the Fed believes. Obviously, the Fed in their own meeting priced in 2 more cuts for the rest of the year. That could change really quickly depending on if the data were to change. But the market as well is pricing in 2 more cuts. And it is very, very difficult when the market is pricing in cuts and the Fed is given forward guidance that they're going to cut to walk back those cuts, because you can actually cause a weakening of the economy by not doing the cuts the market expects. So just to be really clear, I fully expect we're going to see cuts in October. And if you actually go to Polymarket, you can see the same. The Polymarket currently prices in an 84% chance that we're going to see cuts in October. So this is like a out of left field sort of scenario. But if for some reason we were not to get a cut in October, that, in my opinion, obviously would invalidate my thesis around a bullish October and would kind of kick back the start of alt season. If for some reason that were to get delayed, I think October would actually probably end up being net pretty bearish overall for crypto, because you would have all the people who think October is the top of the 4-year cycle. They're selling into like this really big headline event that's net negative of no cut in October. So overall, it'd probably be a pretty brutal month in terms of selling action if that were to play out. But again, right now, I would say the likelihood of that playing out is really, really small. But even if in that scenario, it just pulls forward the 4-year flush that I expect to happen at some point anyway into October, and means that, the cycle shape plays out differently, but it doesn't delay the cycle from happening. Now, what does this mean for extremely tiny small cap alts like Avo, WINR, Una, Virus, etc.? Well, right now you can see the Avo was obviously affected along with everything else and experienced a pretty decent sell-off into this mass liquidation event, where it's down 18% in 24 hours, down to 15 million, where previously before this, it was sitting at around 22 million. Virus is currently sitting down just 1%, so not quite as affected. WINR is currently sitting down 7%. SFG is currently sitting down 9%. RSC is currently sitting down 5%. And Una is currently sitting down 19%. And from my experience, what I've seen is a lot of times these smaller cap tokens weather the storm a little bit differently than maybe the wider market. Because they're so much smaller, there's just a lot less room for them to move to the downside. And oftentimes, because they're smaller, they have more of a cult-like core holder base that is a lot less likely to sell off. For example, had Avo ran all the way up to 200 million over the past couple weeks, the downside potential would actually be pretty massive at this point, in my opinion, given that was a really quick run up, meaning there could be a lot of quick downside movement to follow that if we were to go into more seasonal weakness. But for example, given something like Virus, it's sitting at 5.9 million in market cap. Like, yeah, it could go lower, but there's also say Virus were to dip down to 2 million in market cap or 3 million in market cap. There's a lot of people that are sitting on the sidelines ready to buy that dip who are like believers long term, and they're like, wow, this is a really great entry in terms of price. The only reason you wouldn't see that happen is if we saw really an extended bearish period, like something insane happened and then it was like a month or 2 months of just really bearish price action. That could really cause the price to bleed. But that's really what you'd be looking at, is it'd be a slow bleed of price. And as I've highlighted, the TGA rebuild should be done in about 8 days. At that point, the macro picture flips from bearish to at least neutral, but in my opinion, a bullish environment given some of these catalysts and things that are coming into effect in October. And something that I've been talking a lot about in the Obsidian Council that's actually been kind of blowing my mind is if you look at M2 year-over-year growth, I actually expected, given the TGA rebuild, that we would see this go a lot lower. In my opinion, I was thinking, somewhere down here, or I don't know. I was just expecting it to be pretty brutal overall. But global M2 has actually stayed pretty flat. Like, it did have this dip from 10 all the way down to 6, but from here, it's actually stayed decently flat. And is just kind of keeping up that momentum, which is insanely bullish. As I talk about all the time, I view these as sort of like giant Play-Doh balls. Like, think less of peaks and troughs and just kind of take all this green. Imagine if you could like turn it into a big old ball of Play-Doh. And how big is the size of that ball is a pretty good reference point for the total size of like that bull run in that alt season. Meaning if we were to run all the way up to, 30% year-over-year growth in like one tiny spike and then dip all the way back down, I think that would have a lot less of an effect than, say, if we were to sit at a sustained 10% for like a year straight. I think that would have a massive effect. So you want to see it sitting high and sustaining that over a long period of time, like what we saw in 2017 cycle, like what we saw in the 2021 cycle, where you can see this is just a huge ball of Play-Doh. We don't want to see just a spike and then back down. So I think it's insanely bullish that global M2 year-over-year growth is holding its ground going into the end part of September, which is like the most bearish that we could possibly get right now for M2. And we know we have rate cuts ahead. We have 2 more this year, 3 more priced in next year. And that is only bullish global liquidity on top of the ESLR, on top of all these other things. And so for me, I just see this thing going a lot higher, this momentum going a lot higher into 2026. Meaning if this is the worst, if this is the worst dent that we're going to see in terms of global liquidity, then that is just epically bullish. If you want to check out any of the altcoins that I mentioned earlier in the video, there are links in the description of this video. And really quick, the Obsidian Council is my private community where I share updates every time I buy or sell. I share my entire portfolio. I do weekly video market updates on the current state of the markets, these projects, everything in between, and a ton more. Currently, the Obsidian Council is closed to new members, but I'm opening it back up on October 7th at 11 a.m. Eastern time. If you're interested in signing up, join the waitlist in the description of this video, and I'll be sending an email on October 7th when I open it back up. As always, none of this is investment advice. None of this is me telling you what to do with your money. I'm obviously not your financial advisor, and you should always do your own research. If this video was helpful, make sure to hit that like button. If you want to see more videos like this, make sure to hit that subscribe button and the little bell next to it to be notified each time I release a new video. Thanks for watching, and I'll see you next week.